Cool. Thank you and welcome to my virtual partner presentation. My name is Melissa Darling and today I'll be talking about a 22-unit residential housing complex that I currently have under contract in Stoughton, Massachusetts. The purpose of this presentation is to market and find a partner to work with me on this deal that will supply both the down payment as well as any additional closing costs associated with the purchase price of this property. All details of which we discuss throughout this presentation. And as you see here on the screen, the property is located at 99-101 Porter Street in Stoughton, Massachusetts. As a brief overview of what we'll be talking about today, I'll give some background information and insight into the property, when the seller bought it, and what he's done to improve the asset as a whole. I'll give you a little background on myself, where I come from, and where I'm going within my business. Then we'll dive into the investment analysis and the numbers behind the deal. We'll look at the rental market in Stoughton and take those numbers to estimate a 5-year projection in yearly rental income. I'll give a brief overview of the current lease agreements that are in place, the building specifics and maintenance updates of the mechanicals, and then dive into the purchase and sales agreement that is currently in place, highlighting any deadlines and contingencies. And lastly, we will wrap things up with a conclusion and ways to get in touch with me for questions and interest. To the right here, you see the property itself. You have a frontal view as well as a side view. As you can see, it's been well maintained and the siding is in good condition. The current owner purchased the property back in 2010, whereupon it was poorly managed and not operating to its highest efficiency. Over the course of his ownership, the seller evicted many of the tenants that previously occupied the building, forced appreciated value through building repairs and improvements, and then implemented a system to manage and maintain the property with high returns. The seller's management system includes a strict application process with a series of systematic questions aimed at vetting out good tenants, as well as requires background checks and income verification process. During this vetting process, the seller makes sure that the tenants he rents to are using the building as their primary residence, and that they will occupy the building for at least 1 year. This part of the process is significant because it has given him tenants that have been living there since 2013, and contributes to lower than average turnover for this kind of property. Also part of his management system, a strict set of house rules was created and implemented, and an on-site full-time live-in house manager was put in place. When we get to the rent rolls, you'll see 3 discounted rent rates, all of which are part of the seller's current system of management. Lastly, the seller has created a relationship with the neighboring Webster Bank, whereupon the tenants deposit their rents directly into the business checking account. The bank works closely with the seller on this process and knows to conceal the total bank balance from the tenants. Now I'll take a little bit of time to talk about myself and who I am. I was born and raised on the South Shore of Massachusetts. I've been playing sports my whole life, juggling them with academics, and the combination of the two eventually got me into Brandeis University, where I studied business and psychology with a minor in economics. I was also fortunate enough to play on the varsity women's soccer team for 4 years. It was actually a really great experience because our league games they're all travel trips. So we would fly out to Ohio, play Carnegie Mellon. We'd make a doubleheader trip out to Chicago and Washington University. We also played down in Emory in Georgia. So it was a really good balancing act between the tough academics that Brandeis offers, as well as the travel trips with midterms and all that juggling. So after Brandeis, I worked for 3 years in the corporate world at 2 great and well-known companies. I was at Brown Brothers Harriman for 2 years, and then Panagora Asset Management for a little over 1 year before getting my real estate license in September of 2019. I then went on to a rapid learning binge, if you will. So 2 weeks after getting my real estate license, I signed up for Fortune Builders. For those of you that don't know, Fortune Builders is a very expensive program that essentially gives you the tools, the coaching, and systems to grow and scale your business in real estate investing, on both the fix and flip as well as the buy and hold side of the business. I've since invested even more into my self-development within this field, attending Tony Robbins' Unleash the Power Within back in July, as well as joined the Agent Alchemist Mentorship Group and now the Mastermind Group run by Walter Amarello and his team. I have a picture I took of the White Mountains in the background here. This is Franconia Notch. If you've ever heard of it or potentially hiked it before, it's a great 8-mile hike across the range, and at the end you get this beautiful view of everything that you just hiked. is pretty amazing, but I put it here to show you another side of myself. As invested and motivated I am to succeed in real estate, I still get out and enjoy myself from time to time, most of the time incorporating real estate into those activities. So I'm big on planning hiking trips with local investors. If you like to hike, hit me up, we'll plan something. I still play soccer, so that's another activity that I like to do with other people in real estate. So I currently have an investor soccer team together. We play on Sunday nights. Also, always looking for recruits there too. I'm also super big on reading books, and I've invested in my self-development in terms of Audible books. I try to read at least a book a week, and then I do have a self-development coach as well. Alright, so that's a little bit about myself. Let's shift back over into the analysis of this deal. So in the following slides, I'll go over the public record information of the property, the room layout, the rent roll and expenses, and then we'll dive into the investment analysis and the numbers behind the deal. We'll take a look at the Stoughton rental market and some projections for the year to come. And as well, we'll also take a look at the surrounding areas and location amenities within walking distance to the building. Alright, so this is your public record information. So I just pulled this from the MLS. You can see that the property is owned in an LLC, which is similar to how I intend to purchase the property. It was built in 1930. It has 22 bedrooms with 22 beds and also 7 bathrooms. According to town records, the building has forced hot water and natural gas. There's AC on site. These are all features that I'm going to confirm during the inspection, which again is scheduled for October 29th. Which is this coming Thursday. Let's see. The total square footage is 4,680 square feet, and it is located on a 0.15 acre square lot. The usage is rooming and boarding house, which I have confirmed with the town on the eligibility for this. It's a simple application to the town at the start of every year to keep the license. There are, I believe, 3 other similar use properties in the town, all of which are higher end hotel based. The town did not seem to iterate any concerns for future abilities to obtain the rooming house license. Okay. So next we have the rooming layout. The second and third floors are all single rooms with 1 bed in each. These units have shared bathrooms and kitchens. The first floor is set up a little bit differently. There are 2 apartments with full kitchens in each. 3 studios with small kitchenettes, and then another 2 single bedrooms on that first floor. Alright, so here we have the rent rolls and expenses. The seller currently allows his tenants to pay on a weekly basis if that's what they choose. Some tenants are on government pay through disability that prefer to pay monthly. With that said, the total yearly rental income is currently $248,000, give or take, when fully occupied. You'll see the above notations for discounted rental rates. The people occupying these rooms are currently part of the seller's management system, as we discussed earlier, and is something that I plan to evaluate and improve upon where necessary. I'm looking at those discounted rates as an opportunity to increase yearly rental income in the future. The expenses are outlined to the right here. So we can see a total operating expense of $62,260. I'm currently waiting for backup from the seller to confirm these expenses, and the seller is also working to get me a profit and loss statement for the last 3 years. Alright, so here we have the analysis. I essentially took the numbers from the previous slide and organized them into the corresponding slots. So we have total rental income for the year of $248,000. Then we subtract real estate taxes, which I have calculated at an appraised value of $1.325. That's the purchase price of the building. So this is likely on the higher end because I like to be conservative with my numbers. Next, we have insurance. This is also an estimated value. The seller currently reports insurance of $9,072. However, again, to be conservative, I asked my local insurance guy, what's the cost going to be on the higher end, and that's how I came to that $12,000. Management fees per this analysis are currently at 5%, and I got this number from a local property manager who confirmed their going rate is 4.5% for a property like this. That property manager will also walk the property with me during the inspection to give me some additional insight into how the process works and how the property would function should I decide to use his services. Next is utilities at $22,538. I took that number from the preceding slide. Repairs and maintenance were pretty low according to the seller. So I added a little bit of a buffer there. I calculated it at 5%. You'll see a bit later that many of the mechanicals have been updated, as well as a newer roof, which is probably why maintenance fees have been reportedly low. And lastly, other on this sheet encompasses vacancies and reserves. So in this analysis, I used 10% for vacancies and 8% for reserves to get us to that 50-50 rule. So 50% operating expenses is what I'm comfortable calculating here. So that leaves us with a net operating income of $124,000 and some change. With the agreed upon purchase price of $1.325 million, that gives us a cap rate of about 9.4%. And assuming a 25% down payment of $331,250, we will get cash-on-cash return of 19.34% and a debt service ratio of 2.06%. In dollar amounts, with this conservative analysis, the property has a cash flow of about $60,000 annually, or about $5,300 monthly cash flow. In terms of what the property is worth in comparison to what I'm purchasing it at, we can look to evaluate this in terms of cap rate for easy standards. At a 7% cap rate, which again conservative to the value of the property with these numbers, is roughly $1.778 million. With this valuation method, we're looking at roughly $784,000 worth in equity in the buy. Of course, this is up to the assumption of what the bank ends up appraising it at. It is a unique property in terms of how it operates and therefore, how the bank will value it. So I did some research on my end, with rooming houses in the area, and they all seemed a bit all over the place. What it really comes down to is the management with this type of property, and that's something that I'm pretty confident in my abilities to do so efficiently. I'm young. I'm in real estate full-time anyways. I'm motivated and I like dealing with people. And I also do really well under pressure. So the saying, you do more for others than you ever do for yourself, I've found that to be 100% true in my case. Where I'm seeking a partner, to bring the sum of the down payment, I would not enter into something that I wasn't fully confident in my abilities to manage appropriately. And also on a side note, I didn't mention this earlier, the seller has agreed to give me 4 months of consultation services to take over the property, it's outlined in our purchase and sale agreement. So essentially the plan is to kind of learn the seller's systems right now, take it over, learn the systems, and then see where the best way to improve its functionality is. Alright, so to get an idea of what the Stoughton rental market looks like, I pulled some data from the MLS over the past 5 years. We can see that rents have steadily been increasing over the past few years, and that the average rents typically are between $1,700 and $1,900. Alright, so with this data in mind, I did some math to find what the average percent increase in rents has been over the past 5 years on a year-to-year basis. So we can see that the average rents have increased in the Stoughton market about 2.41% per year. Alright, so keeping that number in mind, I drew up a yearly rental projection for the next 5 years, assuming we increase rents with that rate that we've been seeing in the market, that 2.41%. So by 2023, assuming that 2.41% increase in rents each year, we expect $267,000 in total rental income. Now, this is not to assume that this will indeed come to fruition. Obviously, it's a matter of how the relationship builds with the tenants that are currently in place. What can they afford? How do we want to run the property? As mentioned earlier, there are some tenants that have been living there since 2013. So they're definitely paying below market value rents right now. And lastly, let's discuss the area and market amenities. So the property is situated just a few blocks away from the city center, and as you can see on the map here, The property is the black dot above Olivio's Grill and Pizza. You can see the commuter rail nearby, as well as Webster Bank, where the tenants physically make the deposits for their rents. You can see there's a ton of restaurants and shops within the walking distance of the property, as well as a local grocery store, laundromat, gas station, churches, etc. If you haven't had an opportunity yet, I would highly encourage you to do a drive-by and check out the area. And if you're looking for a good spot to eat Town Spot Pizza, it's down here. They have really good pizza, and their homemade honey mustard sauce is delicious. Alright, so let's move on to the individual lease agreements. As I mentioned earlier in the introduction, the seller implemented a new system for vetting out good and steady tenants, many of whom have lived at the property for multiple years. With that said, the leases that are currently in place are week to week. However, the seller has confirmed that he can have the tenants sign year-long leases or include that within the stopper letters, or both. This is actually an aspect of his system where he finds week-to-week leases to be easier, as it makes the eviction process go much smoother should anything occur. So looking at the chart, you'll see that most tenants pay on that weekly basis. The seller leaves this option available to the tenant. However, it is indeed signed within their individual lease agreements. Most of the tenants that pay on a monthly basis are paid bi-weekly or monthly by either by their jobs or the government. As mentioned earlier, the seller did say that some of them were on disability pay. I highlighted the total rent at the bottom because you'll see a discrepancy in total rent for the year on a weekly versus monthly basis. You'll also notice that the total rents outlined in the lease agreements do not match the total rent that the seller has provided, previously on that rent roll page we were looking at. So I brought this to light with the seller, and he's confirmed that he will get the data, he'll get signed addendum from the tenants for those rents that have increased from the initial signing, as well as extend the lease agreements for those that have expired. Next, we have details on the building maintenance and specifics. This is information that will be hashed out during the inspection, again, which is on October 29th, this coming Thursday. Now for the fun part. So we have the purchase and sales agreement with the different deadlines and contingencies that I've agreed upon with the seller. So deadlines, October 30th is the deadline to which I need to solidify a partner and complete the remaining portion of the down payment, which is a total of $61,250 and equates to a total of 5% down, including my initial earnest money deposit of $5,000. November 17th is the deadline for the inspection and mortgage commitment date. I've discussed with the seller the option to extend the inspection deadline by a week if necessary. Because we are pushing the timeline a little bit on my comfort zone. He confirmed that we can get this done in writing via an addendum if I desire it. And then the mortgage commitment is to solidify funds equal to 75% of the purchase price. Once everything is all in place, the closing date is set for January 6th. So then we got some contingencies. I'll just read through them briefly. So, seller may continue to market and show the subject property to prospective buyers without limitation and may accept backup offers until the time the buyer has secured financing and a closing is imminent, after which the seller will stop all marketing and showings. So I'm in real estate. I'm fine with him continuing to market on this. He's a good guy. I want him to sell, obviously to me, but if not to me, then I don't want to screw him over for a couple months. Seller to provide copies of all lease agreements and any and all documentation required by buyer to conduct due diligence and obtain bank financing. So he's already given me the lease agreements. He's also agreed to get those, the signed addendums for the updated rent rolls. And I am sure I'm going to ask him for more information. He's getting me that profit and loss statement and a couple other things in the works right now. So let's see what's next. So seller required to deliver a buyer estoppel letter signed by all tenants occupying building prior to closing. We already discussed that. Seller to be available as a consultant to buyer with respect to subject property for 4 months immediately following the closing. I mentioned that he's giving me that consultation. If buyer is unable to find and identify a buyer by October 30th, 2020, and subsequently chooses not to proceed with the purchase, then buyer's $5,000 deposit, as outlined in paragraph 3, will be returned. The next one, inspection period as agreed shall be 45 days. However, the buyer shall have the option to extend period an additional 5 days, and all terms and conditions of paragraph 17 shall remain in full force and effect. Town shall issue a zoning determination or certificate indicating that a 22 rooming house is in compliance with local zoning laws. So I mentioned earlier, I already called the town a few times, but we do want to get this in writing. The escrowed funds paid to the seller in the event that the buyer default outlined in paragraph 15 shall be in the amount of $25,000. So, instead of losing the typical full down payment if there is default for whatever reason, instead of the $66,000 that we would lose, we lose the $25,000. Cool. So that's essentially the gist of the deal. I'm more than happy to answer any questions you might have on it or work with the seller to obtain any and all information that would make you feel more comfortable in the decision to invest in this deal. I'm looking for one partner to bring the total sum of the down payment to the table. I do plan to operate the property and manage it essentially on my own, meaning I don't expect my partner to do any of the legwork with regards to managing the property. Obviously, strategy, long-term game plan, those are things that will be discussed between both parties prior to making any decision with regards to, operations, evictions, rent increases, selling the property, refinancing, etc. I'm an open book and willing to work with whomever wants to work with me. So as mentioned earlier, as a recap, the property is located in a great part of Stoughton, right in the center, just a block away from restaurants and local shops. The rental market in and around the area is strong and in a good location in relation to the city, easily accessible from the commuter rail and just steps away from it, as well as local bus. The monthly rent is significantly lower in comparison to the local rental market, making it a competitive option for renters when vacancies arise. And the numbers look good. So we got a conservative cap rate of 9% with a cash-on-cash return of 19%. Equity in the buy, assuming a 7% cap rate for a market value price. In cash values for that, it was cash flowing $60,000 a year, $5,000 monthly. I think it was like $780,000 in equity, assuming that 7% cap rate. For market value price. So on those accounts, it's a good investment opportunity, and I'm looking forward to diving into this with someone who's a like-minded and motivated investor like myself. So I hope you enjoyed this, and if you want to get in touch with me, you can give me a call, shoot me a text. The number is 339-226-9326, or you can email me at info@humblehomesolutions.com. Thanks again, and I hope you have a great day.